You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, let's unpack this. Imagine you're looking at a global dashboard, right? Dials for trade, currencies, energy, geopolitics, all spinning at once. Today, we're taking a deep dive into a pretty comprehensive market and news briefing that landed on our desk. Our mission, well, it's to pull out the most important nuggets, connect the dots across these, complex systems, and help you cut through the noise to understand what's really happening out there.
Exactly. And what's truly fascinating here, I think, is the sheer interconnectedness of it all. A policy decision, say, in one capital can send ripples through currency markets, impact commodity prices quite dramatically, and even reshape geopolitical alliances, sometimes surprisingly fast. So yeah, we'll be looking at developments across FX, commodities, trade, geopolitics, all distilled from your sources to give you that cohesive picture.
Right. First up, let's talk tariffs. They are absolutely front and center, aren't they? Especially in the U.S. Your source highlights this really bold idea from former President Trump, the possibility of tariffs maybe one day replacing income tax entirely. Now, that's not just about trade revenue. It really underscores how central trade policy has become to his economic platform, framing it as a tool with, well, potentially massive domestic impact. But tariffs aren't just about economic policy anymore, are they?
Oh, not at all. We're seeing them used as a kind of multi-purpose lever. For instance, Washington has reportedly warned countries not to support a fuel emissions deal at the UN Shipping Agency, and even suggested that those who do could face tariffs. That clearly shows trade policy being used as leverage beyond just economic goals, doesn't it? It's dipping into diplomatic pressure. Yeah.
That is a powerful move. And we also see it maybe in a slightly different way in other agreements like the one between Mexico and the U.S. They've agreed to set up these high-level groups, apparently, to oversee commitments on security and illicit flows like drug trafficking, illegal immigration. It's not a direct tariff, sure, but it's another example, isn't it, how economic and political tools are being combined to manage these complex international relations.
Indeed, it signals a broader trend. And, on the flip side, we're seeing direct retaliatory measures, too. China, for example, has announced new anti-dumping duties, basically a tariff to counter goods sold too cheaply on certain American optical fibers. It's a classic tit-for-tat scenario, really showcasing that ongoing trade friction.
And it's definitely not just the U.S. and China playing this game. Over in Europe, German Chancellor Merz is getting ready to meet with companies, auto suppliers, basically to discuss the drag these high tariffs are having on their industrial sector. There's even a national steel summit being convened soon. So that indicates pretty significant domestic pressure, I'd say. The economic impact these policies create within different economies, affecting everything from manufacturing right down to supply chains.
And if we connect this to the bigger picture, these actions suggest a continued, almost pervasive trend. Trade policy being used as a versatile instrument for economic gain, environmental leverage, security, even, political statements. And this raises a really important question. What's the long-term impact on global supply chains, on consumer prices, when tariffs become such a dominant force? Our sources suggest, a potential move towards friendshoring, maybe regional blocks, which, might increase resilience for some, but could also lead to higher costs for consumers as production shifts away from maybe the most efficient global hubs.
So trade policy is really becoming a geopolitical and strategic tool now.
Okay. Now, speaking of economics, Luis, let's pivot to foreign exchange. Because the dollar's recent movements, they tell a fascinating story about the U.S. economy. Your source details some soft U.S. job openings data. It shows the number of unemployed workers has now actually exceeded job vacancies. First time since 2021. It's quite a shift, isn't it?
It absolutely is a significant shift. And this specific data point, it immediately spurred market expectations for a September rate cut from the Federal Reserve. These expectations were then sort of reinforced by remarks from several Fed officials. Governor Waller, for instance, reiterated his call for easing this month, but urged caution on the pace after that. It indicates a careful, very data-dependent approach. And similarly, Kashkari noted the economy seems to be slowing into a soft landing and that rates probably have some room to come down. So this implies the market is now pricing in maybe a period of potential monetary loosening, but definitely keeping an eye on the Fed's cautious words. All right, so the market's already reacting, pricing in potential rate changes based on this economic slowdown. How are other major currencies reacting to all this U.S.-centric news and, I guess, the prospect of a potentially weaker dollar?
Well, we've seen the euro holding below the 1.17 mark, mostly due to a lack of fresh catalyst from the Eurozone itself, kind of keeping it range-bound. Sterling sort of paused after its recent rebound. Investors are digesting a flurry of Bank of England commentary that didn't really give a clear directional push. The yen was pretty steady after briefly dipping below 148, again, largely due to a lack of strong domestic economic data to offset the dollar's influence. And commodity-linked currencies, like the Aussie dollar, saw little reaction to Australian trade data. Markets seem much more focused on the upcoming U.S. employment numbers. They'll provide more clarity on the Fed's path. So essentially, the dollar's movements, driven by U.S. economics data and Fed talk, are like a significant gravitational pull for almost all of their currencies right now.
Yeah, it's a classic example, isn't it? How a shift in one major economy just sends ripples across the entire global currency market. Okay, let's dive into commodities now. These are the raw materials that fuel and build our world. Crude oil, in particular, it's been a bit subdued lately. What's driving that?
Your source points to a couple of key reasons for crude oil staying, well, subdued. Firstly, there are these reports circulating that OPEC Plus might raise production at its meeting this Sunday. That would naturally increase global supply, potentially putting downward pressure on prices. And compounding this, we've seen a surprise build in U.S. crude inventories, which suggests maybe domestic demand is softening a bit, although at the same time, there were large draws in gasoline stocks. So both contributing to market volatility rather than a clear upward trend.
That's definitely a lot of moving pieces for the oil market, and it's not just about traditional supply and demand anymore, is it? We're also seeing these major geopolitical plays shaping the energy sector.
Absolutely. That Russia-China deal is a prime example of energy being used as a strategic asset. Russia's energy minister confirmed Rosneft has signed a deal to supply an extra 2.5 million tons of oil to China via Kazakhstan. Now, that's a significant strategic move. It solidifies energy ties between those nations and, potentially redirects global energy flows away from traditional Western markets, creating new regional dependencies.
And on the other side of that coin, we have these unexpected disruptions, like the one in Nigeria.
That's right. Nigeria's huge Dangote refinery, a really significant player in the African market, was forced to shut its gasoline unit for 2 weeks. Technical issues, apparently. This kind of unexpected supply disruption, especially for refined products like gasoline, can cause very localized volatility, maybe price spikes, even if global crude prices are subdued. What's fascinating here is this intricate interplay, isn't it? Global supply management from cartels like OPEC plus calls on unexpected regional disruptions, and these strategic alliances reshaping the energy landscape. And it raises that important question. How will these diverse factors balance out global energy prices moving forward? Our briefing suggests this interplay points to continued volatility, maybe even a potential for a kind of bifurcated market where strategic alliances secure supply for some, while others face more traditional market pressures and price swings. So a blend of supply concerns, strategic deals, unexpected disruptions, creating a really dynamic, sometimes unpredictable picture for the energy market. But beyond oil, how are other key commodities doing, like precious metals, industrial metals? Yeah, they're also showing sensitivity to these global currents. Spot gold, which actually hit record highs earlier in the week, it eased back slightly as the dollar steadied. Some profit-taking noted in our sources too. Meanwhile, copper, which is often seen as a key barometer for global industrial health, it was under pressure amid softer sentiment and, notably, weakness in Chinese demand. That reflects broader concerns about global manufacturing output and economic growth, so it indicates a broad sensitivity across the whole commodity spectrum to global economic health and, of course, currency movements.
It really shows that nothing in the commodity market operates in a vacuum. Okay, let's turn to the geopolitical front now, because your sources paint a picture of, elevated tensions and shifting alliances across multiple regions. First, the Middle East. Still a major focal point. Your briefing notes Hamas signaling readiness for a comprehensive Gaza deal involving the release of Israeli hostages. But then, almost in contrast, Israeli officials are suggesting Washington might not oppose annexations in the West Bank. It seems like a very complex, maybe even contradictory situation.
It is indeed incredibly complex. The briefing suggests this is a region constantly navigating between, immediate security threats, long-term political ambitions, and the significant influence of external powers. This intricate dance of negotiation and assertion makes any clear resolution highly elusive and, frankly, fraught with humanitarian and strategic risks. And amidst those diplomatic signals, Israel also carried out strikes against Hezbollah targets in southern Lebanon, just reminding us that military action remains a stark reality there.
Right. Meanwhile, the Russia-Ukraine conflict continues to be this central point of international concern, but with very different approaches emerging from key players. What are we seeing there?
That's right. Former President Trump recently said he will soon test the strength of the U.S.-Russia relationship. That's an interesting phrase. While also pledging that American troops will remain in Poland and could even be increased if requested. So that signals a potential shift maybe in U.S. diplomatic engagement towards Moscow, while still reaffirming a strong military presence in Eastern Europe.
And how is Moscow reacting to these discussions about future security guarantees for Ukraine?
Well, Moscow pushed back quite strongly. They called security guarantees for Kyiv dangerous for Europe, suggesting they could escalate tensions further. And the stance contrasts sharply with French President Macron, who reiterated that the coalition of the willing, that group of nations ready to support Ukraine's defense, stands ready to provide these guarantees if a ceasefire is achieved. So it clearly shows a deep divergence in international perspectives on how to achieve stability in the region and, the path forward for Ukraine.
So we have these different approaches, different signals from major global players regarding this conflict. It really highlights the very complex path to any potential resolution. And then, sort of stepping back, a broader realignment of global power dynamics seems to be playing out too. Our sources note North Korea's leader Kim Jong-un and President Putin recently met in Beijing. They reaffirmed military cooperation, high-level ties. This particular meeting really stands out, doesn't it? It signifies a growing strategic alignment.
Absolutely. What's fascinating here is how these bilateral meetings, especially when they involve military cooperation, can genuinely reshape regional and global power dynamics. This isn't just a ceremonial handshake, as you say. It's a reaffirmation of strategic alignment that directly challenges existing international frameworks, existing security architectures. The strengthening of these ties introduces new variables onto the geopolitical chessboard, potentially impacting everything from sanctions regimes to regional stability, particularly in Asia.
Okay. Finally, let's bring it back to a domestic economic update, but one that certainly fits into these global currents of economic management. In the UK, Chancellor Rachel Reeves recently dismissed warnings of a, quote, 50 billion black hole in public finances.
Yes, she was pushing back against forecasts that suggested strained borrowing and rising taxes ahead of November's budget. For our listeners, a 50 billion black hole basically means a huge projected shortfall in government revenue. It could necessitate deep spending cuts or significant tax hikes to balance the books. Crucially, she reiterated her fiscal rules, promising that debt will be falling as a share of GDP by 2029-30 and that day-to-day spending will be fully funded by tax revenues. It really highlights that constant balancing act governments face, doesn't it? Managing public finances, especially in a period of global economic uncertainty. And these are clear commitments designed to reassure markets and the public about future fiscal stability.
So what does this all mean for us? We've covered a lot of ground today, from the nuances of global trade and monetary policy to this ever-shifting geopolitical landscape and even domestic fiscal challenges.
Indeed. Your briefing really shows us a world where economic data, political rhetoric, international alliances, they're all deeply intertwined. The key developments we've discussed, like that U.S. job data shaping FX, potential OPEC plus moves impacting oil, and those critical ongoing geopolitical negotiations, they're not isolated events at all. They feed into each other, creating this really dynamic global environment.
And looking just ahead, your source tells us the focus now shifts to incoming labor data in the U.S. and also Europe's retail sales numbers. Both of those will likely shape the near-term path for foreign exchange and commodities. So those are the key developments to watch as markets move through the day.
Exactly. And for you, as you consider these global currents, here's maybe a provocative thought to leave you with. How do these seemingly disparate pieces of information, a tariff policy here, a refinery shutdown there, a diplomatic meeting somewhere else, how do they ultimately converge to influence your daily life? from the prices you pay, for groceries and fuel, to the stability of global markets impacting your investments, and maybe even the security of the global environment around us. These connections are often more direct, more profound than we might initially realize.
It is a lot to chew on. We hope this deep dive has given you a clearer lens through which to view the world around you. Until next time, keep digging.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.